Provision for bad and doubtful debts. Yes, this is our topic and we are done with this. No more new practice, but I just want to recap what we have learned in this complete topic. So this recap is very important. Please put all your concentrations to learn this very important ITTRs. So please focus. Debtors, it's number one ITTR. Debtors are not written off with the amount of doubtful debts. Mostly what we see that we put doubtful debts in the debtors credit side. So don't do this thing. Debtors are not written off with the amount of doubtful debts. Then doubtful debts are credited in an account known as provision or allowance for doubtful debts. This provision is set off against the debtor's balance on the face of the statement of financial position, means balance sheet. And the credit balance of the provision account represents specifically doubtful receivables and or general receivables. Okay. At the end of reporting period, there could be a valid reason to believe that there is no doubt with regards to recovery from specific debtors, but based on past experience, few unidentified debtors might become bad, for which provision is created for general debtors. And then credit balance on provision account. Credit balance on provision account is remeasured at each reporting period. That's why there would be increase or decrease in the balance. If the required means the remeasured balance is greater than the previous balance, then an additional expense is recognized as bad debts with the incremental amount. This is what we have already practiced. And if the required means the remeasured balance is lesser than the previous balance, then the amount of reduction in balance would also reduce the bad debts expense for the period. And this is also what we have already practiced. Amount for the bad debts expense chargeable to the income statement is worked out as below. So, bad debts written off during the reporting period, add increase in provision for doubtful debts, or if there is decrease, then less decrease in provision for doubtful debt. This is very important formula to remember. And less bad debts recovered during the period. So bad debts recovered are not taken as an independent income. Rather, these are subtracted from the bad debts. Then amount for the discount allowed expense chargeable to the income statement is worked out as below. Actual discount allowed during the reporting period, add provision created for discounts allowable. Then presentation in statement of financial position means the balance sheet. What do we present in balance sheet? We present debit balance of debtors account and credit balance of provision for doubtful debts account are set off in the statement of financial position. Provision for discount allowable is calculated on remaining balance of debtors after subtracting credit balance of provision for doubtful debts from the debtors balance. And then provision for discount allowable is subtracted from the debtors after subtracting the closing balance of provision for doubtful debt. Very important. So don't do any mistake in terms of presenting these balances in the balance sheet. And then finally, when you have debit balance of bad debts appearing in the debit side of trial balance, it means this debit balance has already been accounted for. It is being extracted from the bad debts T account. So the bad debts balance appearing in the debit side of trial balance should not be subtracted from the debtor's account that has already been accounted for and its credit has already been taken in the debtor's account. So that's all from the topic provision for bad and doubtful debts. I trust you have strong grip on this topic now. Thank you.